What secret Michael Burry revealed about Cathie Wood's Ark Invest? Cathie Wood says Michael Burry doesn't understand innovation space after he bets against Ark Fund. Today we're going to talk all about what secret Michael Burry revealed about Cathie Wood's Ark Invest. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you are interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead of the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Market irrationality is a concept that is uniquely familiar to the stock market. For those who have been through market cycles over the years, I believe most would be able to vouch that the stock market is one crazy place. It's at times highly efficient, but can be a complete mess. On a long-term basis, it'll make sense, but the majority of investors are not long-term investors. This means if one gets caught up in the wrong cycle, they may very well lose everything. Conversely, if they're riding a tailwind of the market, they'll land a windfall within a short span of time. In the past 2 years, the stock market has been disrupted in many ways. Apart from the pandemic shock and injection of liquidity by central banks around the world, the influx of retail investors have reshaped the investment landscape altogether. This brought out a stark contrast in the investment approach towards the stock market, none more so than between the Big Short legendary investor Michael Burry and Ark Innovation ETF CEO Cathie Wood. Burry became famous because he was among the first to correctly forecast the 2008 subprime mortgage crisis and made more than $700 million for his investors. His firm, Scion Capital, recorded returns of 489% since its inception in November 2000 until its voluntary closure in June 2008. The S&P 500 returned only 3%, including dividends over the same period. Wood, on the other hand, is the latest Wall Street darling, as her flagship fund, Ark, is among the top performers since 2020. Burry became famous because he was among the first to correctly forecast the 2008 subprime mortgage crisis and made more than $700 million for his investors. His firm, Scion Capital, recorded returns of 489% since its inception in November 2000 until its voluntary closure in June 2008. The S&P 500 returned only 3%, including dividends over the same period. Wood, on the other hand, is the latest Wall Street darling, as her flagship fund, Ark, is among the top performers since 2020, coinciding with the pandemic recovery. Ark Investment Management founder, CEO, and CIO Cathie Wood has lashed back at news that hedge fund manager Michael Burry has taken out a $31 million position against her company's flagship ETF. According to a 13F regulatory filing on Monday, the Big Short investors Scion Asset Management owned put contracts against 235,000 shares of the Ark Innovation ETF at the end of Q2, Bloomberg revealed. With Burry warning retail investors about unsustainable valuations and the potential for the mother of all crashes in cryptocurrency and meme stocks, Ark returning 314% between its low in March 2020 and its high in February of this year would have made it a prime target for skeptics looking for a shorting opportunity. While the exact detail of the contracts taken out by Scion are unknown, put positions would have allowed the firm to sell ETF shares before a pre-agreed price and date, with the contract's value increasing as and when a security's value falls below the agreed price threshold. Taking to Twitter to respond to Burry's bearish play, Wood said, to his credit, Michael Burry made a great call based on fundamentals and recognized the calamity brewing in the housing mortgage market. I don't believe that he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. Offering a positive word on the prospects of the firm's ETFs, Wood added, in our review, the seeds for the innovation that Ark Invest is dedicated to researching were planted during the 20 years ending with the tech and telecom bust. Having gestated for more than 20 years, these technologies should transform the world during the next 10 years. Unfortunately for Ark, Burry and others seem to have had strong convictions against innovation tech companies in the short term. In addition to direct Ark shorts, Scion also increased wagers against Tesla, a top Ark holding, from 800,100 to 1.1 million between Q1 and Q2. Since seeing its price peak little over 7 months ago, Ark has since fallen by 26%, with some of its top 10 allocations, including Spotify and Teladoc, falling more than 30% so far in 2021. Also, having comfortably outperformed most conventional benchmarks in 2020, the 3 top Ark ETFs have underperformed the S&P 500 by at least 20% year to date. This period of underperformance is in line with conventional wisdom on bond coupons, with U.S. 10-year Treasury yields almost doubling between the end of the year and the end of Q1. Such trajectories tend to be bad news for growth equity-based ETFs, such as ARKs, given their underlying often have premium valuations based on hopes of future growth. When rates rise, meaning more expensive borrowing, this has an impact on companies' future cash flows, and in turn, a negative effect on valuations. Despite this, Wood stressed the worst of the corrections were confined to the beginning of the year. Most bears seem to believe that inflation will continue to accelerate, shortening investment time horizons and destroying valuations. Despite what we believe has been a supply chain-related, short-term burst in inflation, both equities and bonds have appreciated since March, she continued. More contentiously, while many are seeing the spread of the COVID-19 Delta variant as a warning light for currently bullish equity markets and a cause of the recent commodity slump, Wood suggested current market strength will provide another leg up for innovation strategies. The deflation in commodity prices is cyclical, but is adding to the secular forces caused by technologically enabled disruptive innovation, good deflation, and creative destruction, bad deflation. If we're correct, GDP and revenue growth will diminish until the opportunities in nascent technologies begin to move macro needles. In this environment, innovation-based strategies should distinguish themselves. ARK backers seem to agree. The ETF has gathered $6.5 billion assets since the turn of the year, despite returns being in negative territory. These investors, like Wood herself, are taking the long-sighted view that volatile, concentrated portfolios might have pronounced periods of underperformance, but also the potential for the most exciting runs of strong returns. Abandoning the common line that all returns equal the market before fees, ARK supporters believe the drawdowns are a temporary pain worth enduring for innovation-based alpha. Over the last 5 years, this has been proven right, with the company's core trio outperforming Europe's most popular S&P 500 ETF by a factor of 3. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!